government has released 5 billion for the fourth quarter of this fiscal year, which is equivalent to 22.6% of the government's budget allocation. Compared to the third quarter's release of 20 billion, it is anticipated that the release of this money will supply crucial sectors with much-needed resources. However, concerns remain over the efficiency of government spending and the long-term viability of Uganda's fiscal balance.
This quarter, which is going to run up to June, as I told you, starting this month of April, we have released 5.08 trillion, representing 22.6% of the government of Uganda budget, and this has been released as follows. Wage, we have released 1.6 trillion, and that is 25% of the total wage. Non-wage, we've released 2.12 trillion, that is 19% of the non-wage. Government of Uganda Development, we have released 1.334 trillion, that's about 17% of the Government of Uganda Development budget. And arrears, we have released 24.19 billion, that is 3.7%. So in total, we've released 22.6% of the budget this last quarter. The above release translates into a cumulative outturn of 106.2% of the approved budget of Government of Uganda.
Government has been encouraged to prioritize paying off arrears by cutting back on needless spending, increasing revenue, and putting steps in place for debt restructuring or refinancing in order to combat the huge debt burden.
For continuing to facilitate economic recovery of our economy and especially controlling the inflation, which has now come down to 9% and perhaps it's going to continue to come. But there are a number of issues that the PSST and the technocrats in the ministry and the government that want to raise, put them to attention, which could further help in the economic recovery of our economy. The first one is the high debt burden, I think, remains a thorn in our flesh. And we want to commend, of course, the Ministry of Finance for prioritizing payment of arrears, especially the domestic debt. But we still think that we could substantially reduce the domestic borrowing so that we save money for the private sector.
Karuna Magembe, Executive Director at CS Bank, says that in order to properly manage the economy, the government needs to discover a symmetric method when drafting the budget. Hence, a balanced approach to budget planning entails striking the right place between spending reductions and investments in crucial sectors.
When we look at the budget for 23-24 that is being discussed now, for example, Ministry of Gender has a projection of losing around 79% of its budget from the current year. Our biggest question is there a criteria that defines these budget cuts?
A well and planned budget ensures that the government effectively manages available resources and provides essential services to its citizens while promoting long-term economic growth and development. Martha Nemsima, Smart 24 TV, Business Today.